Hey there, traders. What's going on? Jamie Saettele here. It is June 11th, 2021, and let's get into the charts. This is FX Power Hour with me, Jamie Saettele, Chief Technical Strategist at Scandinavian Capital Markets and founder of SB Trade Desk. So let's share the screen here and get started. All right. So essentially this week was all about today, Friday, because literally nothing has happened until today. In fact, if I bring up, I actually had this plan to show you guys all these different crazy tight range charts. So this is Aussie right here. We had, before today, we had a weekly range of 0.62%. Now the weekly range right now is only 1.13%, but that is literally today's move is like doubled the move. So we don't have crazy small ranges like we had, going into today for this week. But finally, we might be getting a sustained dollar bid. So with that, why don't we move on to our usual program here and start with our US dollar, okay? And again, if you've got questions throughout the webinar, just please ask them, and I will do my best to answer them when time permits. All right, so going to the daily chart here. How many times have we looked at this chart over the last couple of months? A lot. It has been a brutal range, really since early May. We've gone absolutely nowhere, and you could argue even since mid-December. And again, I'm still looking at this as a very large base to work higher from. Excuse me. And if you are wondering why I'm looking at it like that, there are several reasons. Notably, you've got the entire rally from 2012 to 2020, the 38.2 retrace, right, of that rally, nailed support back in February. You've also got, obviously, what is this? Let's see here. Okay, looks like we're back. Looks like the internet connection went out for a little bit, so apologies for that. All right, so let's move on back to where we were, US dollar. Again, just a giant base. And the trigger for me, has been for a while, obviously, this center line, this median line of the pitchfork that originates back here at that 2017 high. And we're obviously very, very close to that. So I believe it was last Thursday when we got close to it. Then the next day, Friday, NFP Friday, market gate or the dollar gate bank, everything. Then we went quiet for this week until today, in which we are back on the bull train here for the dollar. So about 11,770 is the spot at which we start to maybe get something really sustained on the upside for the dollar. And again, going back to this 4-hour chart, we broke that little wedge last week, right? Had a couple of attempts at it and finally broke it. So we are finally starting to see some sustained upside pressure. And another thing that I want to pay attention to is, so RSI, a lot of people look at RSI as the overbought, oversold, right? There's a much better way to look at it. You want to look at it from the concept of RSI range rules, okay? RSI range rules state essentially that in a bull market, obviously depending on the time frame you're looking at, your support and your price lows will come in when RSI is down near 40. Okay, and at price highs, the market will get extremely overbought, right? Well above 70, into the 80s, etc. The opposite is true in a downtrend, right? The market will become very oversold on price lows, and on price highs, you'll stop probably around like 60 or something like that. Well, notice what's happened here. Basically, since the end of May, right? All the price lows, RSI has bottomed down near 40, and we are getting up through 70 on these last couple of rallies. So that is an important, behavior change with respect to momentum. And momentum in this case refers to RSI on the 4-hour chart, but that is something that should be noted. And it's just kind of an objective way to look at trends. In fact, if I were to bring up, say, let's take a look at 240-minute chart here. So various. So here's euro. Okay. So like look in the uptrend, for example, from the low here. You go overbought here. From that point forward, that was in early April. Look what happens. The market's overbought at the highs. We not once did we go oversold until literally just now on that 4-hour chart. So that is an important behavior change. The fact that we were going to get a breakdown was kind of suggested, if you will, the market was in a bearish state when we were, RSI was banging up against 60 here and could not push through that level over the last couple of days. So, that's a good kind of clean way to look at, momentum on any time frame. All right, moving on. Let's go to DXY real quick. Same deal here, starting to break out. Not much to really add to this other than the market is breaking out. You've got a nice base here, something of a head and shoulders bottom, if you will. And let's just move to euro because I don't have a whole lot to talk about DXY on. All right, so euro, we talked about this last Thursday, and there is no change to this. The level that we're looking towards is about 1985. 1985, and ultimately the big level to pay attention to is going to be the lower parallel of the channel from the March 2020 low, and that, my friends, is going to be down near, depending on where we or when we get there, it's probably going to be like mid-18s. And that's going to be the real key level to pay attention to, because you've got the center line, which was support and then resistance. You've got the upper parallel, which crossed every important high since over the last year, really. This is going back to July of 2020. And then lower parallel, which has yet to be tested. And I'm pretty sure that why do I not have that on here? I'm pretty sure that intersects a level here. Hold on. Yeah, it does. Okay. So pay attention to this black line, not these thick blue ones, but if we go to that black line, that is down in the vicinity of that lower parallel as well. So again, that's going to be down, like mid-18s, call it 1850 or so. But again, the big levels for euro, 1985, right? And mid-18s. Also, and I did talk about this last Thursday, but it's worth mentioning again. The rally from the low down here consists of two legs that subdivide by 61.8%, right? That means that the rally from here to here is 61.8% of the rally from here to here. That's important because that leaves the rally in a well-defined 3 waves rather than an impulse, okay? With the implication being that this is still corrective. The rally is still corrective. The decline is obviously corrective, but so too is this rally, which again, if we can crack this 1850 level down here, eventually, then that puts us on a path towards a break of the low down here, at the end of March, which is 117, and that leaves us with a big ABC. I guess technically it would be a WXY, but that doesn't really matter. All we're talking about is a huge correction from that January high. Okay. Let's go to British pounds. So key level for cable here is going to be this, the channel right here, which is essentially yesterday's low. So let's call it 140.70 or so. And if you can break that level, then you're looking at the 140 spot. But we're talking about pretty short-term levels here. What I'm more interested in is eventually a test, potentially, of this 2007, 2014 line, this thick magenta line here. That's going to be the real test for the larger British pound bull case. Okay, that's going to be down sub 139. If we can get down there, say, towards the end of June, early July, that would put us at an intersection with the lower parallel from this shift fork back here. Okay. And again, if you are at home and want to draw these in, you should, and simply connect that March low, that September high, and actually throw it right there. And that September low, obviously double click it, make sure it's shift, right? Modified shift is going to look like a trend line like this. Shift is going to offset it, and there you have it. And you can see that nailed at the high, that upper parallel. The center line does cut through, a lot of important pivots, right? Most recently, you can see that it was precise resistance and support, right? Resistance, resistance, support, support. We've nailed off that as resistance again today. So eventually we will be looking towards that lower parallel. The next level is going to be right here, which is 39.50. And then eventually talking about the lower parallel, which, again, 38.50 or so. So that's where my head's at with cable. But that is the biggest level to pay attention to as far as British pound is concerned. Okay, hold on real fast. I'm going to look at the various VWAP levels. We'll just look at them all together once I get through, or once I get to like Aussie and Kiwi, because those are really important with what's happened there. Okay, dollar yen. Frankly, kind of, confused on dollar yen. I'm not sure what's going on. Other yen crosses do look like they actually are starting to break down a little bit. The biggest thing here, again, is this 2018 to 2020 trend line. We tried to break it in, end of March, early April. It failed, right? We then came off pretty hard. And since then, a big choppy mess. So the question is, are we, consolidating here before going for a big move higher? Because if you break this 2018, 2020 trend line, that would be, a significant change in behavior for dollar yen. At the same token, if we can break below like say 109.20 or so, then you have a near-term breakdown, which sends us lower. So dollar yen for me, holding pattern here, and I'm not quite sure what's going on. And I will leave it at that. It's okay sometimes to say, I don't know. At this point, I just don't know. There are other yen crosses that we'll look at in a second, which do actually look like they are finally starting to break down. All right, let's go to Aussie. All right, so Aussie's been a hot mess. Thing for me is, so last week we looked at this and we were looking at that 74.15 level. I still feel like we get there. It's just such a magnet. You've got the high from September, the 23.6 retrace of that entire rally from March 2020, and you've got two equal legs down from the high here in February, and that would get you to the lower parallel, say towards the end of June, and that's going to be a huge level. So I'm continuing to look towards 74.15. Obviously, today's big bearish outside day, right? You can see how many days have we engulfed here. 1, 2, 3, 4. The last 4 days we've engulfed on the high, the high and the low. So perhaps this finally gets us going, kind of as a trigger to get towards that 74.15 level in Aussie. And speaking of Aussie, all right, so this, you see all these, I know there's a lot going on right here, but you see all these lines here. This is volume weighted average price from the year-to-date low, which is the April low, volume weighted average price from the February high, which is year-to-date high, and then the thick line is 2021 volume weighted average price. So just volume weighted average price from January 1st, okay? All of those are between 10 pips, 77.30 and 77.40. That is clearly your line in the sand. Call it your bull bear pivot, if you will. This looks like a giant head and shoulders pattern to me. I thought we broke it last week. We did not. It was a false move. Maybe we finally try to break down with this move here today. Either way, we break last Friday's low, and I think it's off to the races towards that 74.15. Kiwi is in the exact same position, not surprisingly, year-to-date high, volume-weighted average price, year-to-date low, volume-weighted average price, in 2021, volume-weighted average price, 71.65 to 89. Again, that is call it your bull-bear pivot, if you will. And speaking of Kiwi, that 68-ish area was the level that we continue to look towards in Kiwi. Again, just a clear horizontal level, right? December 2019 high, September highs from 2020, 38.2 retracement of the entire rally from the 2020 low is going to be 67.60. Two equal legs down from the high is 67.95. So yeah, we are looking towards that level. If I threw a channel on here, that would put us down, around the end of June, just like, I'm going to leave that on there, just like Aussie. So no change there with respect to Aussie and Kiwi as far as continuing to hold a bearish, a bearish bias. And finally, we might be trying to really break down that 71 figure here. I have that in a bold black line here. That's a big line in the sand for me. If you get below there, I think maybe we finally get going on the downside. You can just see that's been important since December, and it was big support, upside, big support. And then once we cracked it, right, had a big drop, broke through it, big rally. So let's see if we can get below that 71 figure and, get us down on our way to 68. All right, dollar CAD. This is a big one. We have completed and have a bullish signal as of today, right? Got a couple more hours left in the trading day, but for all intents and purposes, we are closed. Europe is closed. Everything else is, FX-wise is pretty much closed. And the close above 2144 sets us on a bullish target with a big double bottom, if you will, here, rectangular bottom, whatever you want to call it, towards 2020 or 2275. But generally speaking, looking towards this upper boundary line here, simply, a trend line that goes back to April of 2020, and that's going to be up, depending when we get there, called around 124 or so, just above the low here from March. Okay. On a bigger picture basis, just kind of scroll out here. This is a monthly chart, okay? Taking out that little low there from September 2017 and turning up, just a great place to turn up for a little bit, right? And generally speaking, everything down into, I posted this chart actually before Bank of Canada the other morning. Everything down to 1875 is just a huge zone, right? You've got the 50% retrace of the rally, from the 2007 low. You've got lows here from May of 2015, big high back here from February 07. Essentially, it's just a big zone, right? So obviously, we're trying to turn up on a broader basis from the top of that zone. And, look on a weekly chart, a little candlestick analysis, if you will. Look at those wicks, right? Those little, wicks, kind of a doji here, long legged, long legs on the bottom, right? What does that indicate, right? What your Steve Neeson textbook would tell you that dojis indicate indecision. Well, by definition, if you have indecision after you've been going down for a while, then you might have a change in behavior, right? Indecision on whether that is still a downtrend or not, changing from down to sideways to up. So, yeah, I am looking higher again, probably towards that 124 area initially in dollar CAD. Do have a question here. Mike to Gmail asks, is advance and decline close to the ADX positive and negative? So they don't have anything to do with each other. I think your advanced decline, I think you're probably referring to equities. And yeah, ADX is a price-based indicator, and advanced decline applies to a number of issues on an exchange that are going up that day or down that day. Okay, let's move on. Dollar Turkish lira is a very interesting one. So first, we have a question here from Text Analytics about S&P. I will get to that in a second. First off, we've got dollar Turkish lira. You can see that the latest breakout from this range went to 1618 extension of that range, right? We've since broken down. We're now back well within that range. Downside focus for here on a near-term basis is about, say, let's call it 804 or so, which is just the trend line here. But I am looking to short dollar Turkish lira. I actually had an order up here, 856. Obviously did not get triggered because I just put it in yesterday. A couple of things to consider here. I wrote about this in last night's article, but one of them was a way to enter the short. If we bounced hard from the 200 period average on the 4-hour chart, okay, the idea was to short the 50 period average, just like here, okay. That's not going to happen because we've already broken it, it seems. So what you want to do now is look for something like this, right? Where we break above the 200 average, pull back to the 200 average, or in this case, break above the 200 average, pull back the 200 average. So that would be something like this. We'd have to break it a little bit more and then come back, right? And then that's your short. So just kind of a way to enter the market here is what I'm thinking with respect to dollar Turkish lira. So that's an interesting setup to think about going forward. Let's look at a couple of yen crosses. So this is a really good one, Euro Yen. we go out to a daily chart here. We had identified probably a month or so ago, maybe longer, I don't know. 134.30 is a massive, massive level for Euro Yen. It was the 618 retrace of the entire decline from 2014. It was also the 2 equal legs rally from the May 2020 low. Okay, well, zoom on in, and you can see that the rally from that low in October of 2020 is a big wedge, and we've turned down from that wedge. We actually got triggered on a short here today at 133.40, and we are now looking at 132 as a level to possibly bounce at. But if you broke that, that would be an even bigger bearish opportunity. So it would be like this, right? You can come back and then look to short up here, right? Former support, provide resistance, and all that good stuff. So Euro Yen, good short opportunity there. Kiwi Yen, also a short opportunity. In fact, I've got a shift fork here from the March 2020 low. And look at, oops, why do I have that on? Don't need that. Look at the 25 line here, okay, and the center line and the 75 line. Look how perfect price had ridden that, okay? Look how perfect price had responded to that center line. And look how perfect the resistance was back in February at the 75 line. Well, this line here, you can say, was former support. So now we look at it as resistance. So next week, if you did get a rally back towards 78.75 or so, that would be ideal resistance in order to short. And your initial level is 76.70, which is right here at the April low. And that's where you're looking in Kiwi Yen. Obviously, a break there would, be a more significant bearish development. Aussie Yen, also love this on the short side. We're putting to the test the trend line right now. And on this, I actually want to bring up a few things here. Let me bring this up from yesterday. Hold on. Because this is a little different. Okay, so Aussie Yen, so the indicator that you're looking at below the price is the range size, all right? 20-day range size, so it's just the high minus the low over 20 days, highest high, lowest low, etc. What you see here is that yesterday, as of yesterday, the reading on this was 1.06%, a 20-day range of 1.06%. The lowest we've had since 2019 in July, which happened right here. I have it highlighted. What that means, you can think about this like a narrowing of Bollinger Bands or just, a very small range, whatever. Tiny ranges in Aussie Yen with the, the nature of how it trades indicate extreme complacency and tend to happen right before the market absolutely falls, through the floor. You can think about it. This is a good risk sentiment gauge, if you will, or vehicle. So that's why you want to keep an eye on Aussie Yen, because a break of this little trend line here gives you a short opportunity, and I would say a pretty big one at that. So keep an eye on Aussie Yen. Okay, that is it for me on FX, but let's take a quick look at some commodities. I've been focusing on this copper chart for a while, and for good reason. A break of this trend line here that goes back to March 2020 in copper, which we tried to do yesterday, bounced hard today. But a break here would also break the 50-day average. That would indicate, again, I love saying this, I love this term, a significant behavior change. That would mean that the nature of the market's changed. It's no longer an uptrend, and in fact might be a downtrend. And the importance of copper, obviously, to the inflation trade, to dollar, dollar bullishness, bearishness, etc. Commodity currencies, that would be a big important development in which that would put some tail at the wind of the Aussie short, Kiwi short, dollar long, etc. So keep an eye on copper, gold, pulling back, and the big level to pay attention to, I think we talked about this last Thursday, is going to be 1840, 1850. That's going to be the 200-day average as long as this lower parallel. So keep an eye there. I would say, slightly constructive gold as long as you are above that level. But I don't want to, on a trading basis, don't want to be buying into it here. I'd want to be waiting for, say, those 1840s, and then see what happens. If you get a response at that level, you can look to take it higher. TLT, we had a big move earlier this week. One thing I talk about a lot with center lines is gap risk around center lines. And sure enough, that's exactly what happened. You can see here, perfect resistance, perfect resistance, perfect resistance, closes at the median line. The next day, big gap up, right? Big gap up. So this is very bullish for TLT. We should be headed towards, say, 148, 148.90 or so. And after that, make your decision on what's going to happen. I should say the market will make its decision on what's going to happen. But the big pivots here are going to be this 25 line here, 75 line here, right? From here to here, back to here, right? I've talked about this concept before of markets kind of, like a train, like going from stop to stop. And the stop is where the decision point is made. In this case, your stops and your decision points are these 25 and 75 lines. All right, so that is TLT. Let's get to S&Ps, which is what Tex Analytics had asked about. Haven't done a whole lot with S&Ps over the last many months because, frankly, it's been boring as all hell and nothing's happened. So yeah, I don't have much here, man. Back when we were riding this and kind of getting bearish every time we get to this line, and then since then we've gone into this terrible, awful drift, and I don't have anything to offer on S&Ps right now. Again, the divergence is striking, right? I mean, look at RSI here. I mean, that's a big divergence for sure, right? It's another important thing when you're looking at divergence with indicators. Look at the close prices, not the bars, not the highs and lows, because the indicator doesn't know highs and lows. It only knows the close price. But yeah, we've got a big divergence here with S&Ps at that new high that we just made yesterday. So if I get a volume reversal signal or something like that, which tends to mark tops in these things, then I will obviously publish it with my work. But other than that, Tex, I don't have anything to really offer on S&Ps. I do want to actually show Bitcoin real quick because we've been nailing this. I mean, the turns have been incredible. Okay, so we called for this drop, basically called the top, then called for the drop down to 30,000 or so. We got the bounce, then we called for this drop. And what we've got now is a little 5-wave rally. We're probably going to be pulling back, I'm thinking, to say 34,000. And then I'd be looking for a move up to 44,000 before we go lower yet again. And we've got some pretty good historical precedent after big drops like the one we just had, where we essentially dropped by over half So look at the drop back here, 2013. We retraced back to the 38.2 retracement, and that was resistance for the rest of the drop. 2017, 38.2 retracement, that was resistance for the rest of the drop. Your 38.2 retracement here would be 43,370. That's why I'm saying just call it 42,000 to 44,000. And that, I think, is going to be resistance for the rest of the drop. Also, follow that 200-day average. Look at this thing. It's ridiculous. All right? Break it, resistance. Break it, resistance. We broke it. Let's see if it's resistance. So it can be that simple as far as just observations concerned. You don't need to get too fancy with this stuff. Obviously, Bitcoin is a purely technical trade. There is no fundamental value to it. It is in the sense like gold, in which it is purely supply demand, what people are willing to pay for it. So yeah, pay attention to that. All right, I do want to remind everybody that if you see at the bottom of your screen link for Telegram, you can sign up for that to get updates from me on the market, etc. And again, we do these webinars most of the time on Fridays at this time, at this hour, but sometimes they are on Thursdays. Depends on my schedule. However, we try to make that known as early as possible. All right. Okay, so that is it for me. Again, Jamie Saettele here, signing out, and I hope everyone has a wonderful, happy, safe weekend. All right, take care. Bye-bye.